Hello and welcome to the program. My name is Ben Cleary. Our special guest today is Tawn Allen Rose, the editor of CPA Magazine. Tawn, it's a pleasure to have you with us today.
Thanks, Ben. Thanks for having me here.
And we'll tell you a little bit about him. Tawn is a CPA. He's been with Price Waterhouse, Rose and Cash CPAs, Vice President of Solomon Software. In 1991, he launched CPA Software News. In 2001, he launched Collection Advisor. In the year 2002, he launched CPA Magazine, and in 2003, NPA Magazine. You've been busy.
I'm what they call a serial publisher.
Serial publisher. Well, of course, CPA Magazine, I guess, is the one that we'll be talking about a little bit today, and about things that affect CPAs and tax preparers and the business. And that's something that you guys really spend a lot of your time staying up on. Let's talk a little bit about one thing that I was reading over the notes in preparation for the program. And you made the statement that accountants are sexy.
Right.
So
right.
Could you expound on that just a little bit?
Well, for the longest time, accountants have been considered a staid, conservative profession. But in this issue of Business Week, September 24th, they announced this is the year that accountants became sexy. Mm-hmm. And mainly what they were referring to is the fact that accountants are in demand. And there are a lot of reasons they are in demand. I suppose if you have terrific analytical ability, that doesn't necessarily mesh with a charismatic personality. Mm-hmm. However, with the number of accountants being greatly reduced and the demand being very heavy, accountants are indeed sexy. So I was going to talk a little bit about why the demand has increased, why the numbers of accountants have decreased, and why regulation has made it even fewer accountants able to practice before the IRS, and then go heavily into IRS audits since they're greatly on the increase right now.
So is that what's happening? Are we seeing more audits and more tax work coming up because of the complexity of the regulations? Is that why that some people are getting out of the business and others are getting a bigger share of the business?
Well, for a lot of reasons. The big thing that happened, Ben, was what they call the tax gap. $345 billion is considered the tax gap, taxes that the IRS could be collecting if everyone reported accurately. Mm-hmm.
Well, it's such a regulated business. Who can actually represent a client before the IRS? Who's qualified for that?
Well, tax preparers can accompany their clients, but it's often the best idea if you use someone that can represent you without the client being present. Mm-hmm. And those are CPAs, attorneys, enrolled agents, and if someone is admitted to practice before tax court, which attorneys are automatically admitted to practice before tax court. However, you can become admitted to practice before tax court by passing a test, a very difficult test.
Tawn, I guess one thing that makes it so important that someone who is in the tax practice knows what they're doing and is qualified to do this and represent their client properly is the penalties involved in this are really steep, aren't they?
No doubt about it, Ben. Sometimes we think, well, what is the scary part about an audit? But clients lose sleep over it. And one of the reasons for that is because it's very easy for the IRS to assess penalties. First, there's a 5% negligence penalty or a disregard for the rules penalty. And then they can also assess a 25% penalty for substantial understatement. And there's interest on top of that. So it causes small business persons and anyone being audited a great deal of concern, and they could lose some sleep at night because of these penalties.
Okay, so you get called in for an audit, and we were talking about field audits. Let's talk about that a little bit. What happens? What should I, as a tax preparer, expect from the IRS?
Well, the first thing that they will normally do is send out an IDR, information document request. And normally they'll ask for the tax return, the prior year tax return, and all the bank statements for the year and the month preceding the year and the month after it. So you have 14 months under review so that they can see all the inflows coming into the business or the person's account and all the outflows. And they'll do a reconciliation on that.
So when you're actually meeting with them, better to do it on their turf or your turf?
Better in the IRS office because at that point you're bringing what they wanted. Some of their information document requests can be overreaching, and the practitioner can decide when it's time for him to do the audit. They'd rather that the accountant was ready as well, rather than just show up. There's a tendency to just do exactly what they want. But it's better if you're well prepared and go to their office. But often they want to come out, and they also have the right to come and visit the client. But at all times, the client can be shielded from the IRS. They don't actually have to talk to the IRS. And that's very important. One of the most important pieces of advice that we get from people that deal with the IRS is to shield the client from the IRS.